I don't know if anybody saw, Mark Cuban has been posting last few days on social media. He says he paid $276 million in taxes. And the quote was that he's proud to pay his taxes every year for all that the country has done to him. Of course, Cuban's net worth reportedly is like $5 billion plus, 5.4 billion. All right, let's get to another guy now with a very, very big tax bill. Doug Flynn joins us now. He's the certified financial planner, of course, co-founder at Flynn Zito Capital Management. Do you agree with Mark Cuban that the most patriotic thing you can do is pay your taxes, Doug? Or
I'm just as patriotic paying a little bit less than I do pay, but certainly paying is a good thing. It means you made money, and there's nothing wrong with that.
All right, let's talk about the economy, and then what do we have? 4 or 5 minutes left of the trading day. We'll talk about the stock market in a moment. On the economy, one of the big stories all week long, obviously, has been the war. There was an interesting piece in the Wall Street Journal on how the market has been reacting to it, saying that investors are pretty much terrible at assessing geopolitical risks usually, but now they're acting rationally. Market reaction to the Iran attack tells us stocks are not in a bubble. Basically that, oil went up a little leading up to this. Then when it wasn't the worst case scenario, it came back down. Stocks kind of rational as well. What do you make of how the market has been handling all this noise overseas?
Yeah, I don't think it's really impacted the market that much yet. I think I don't want to call them minor conflicts, don't really impact it. The market's really looking for, is this going to escalate? And does it turn into something much greater? That can have a very serious short-term impact in the market and drive it downward as far as stocks are concerned. And then bonds and gold and commodities might go up in that short-term kind of scenario, which tends to happen in the short term. Now, long-term, weirdly, if you look historically during wars, the market actually has better performance during wartime than it does during peacetime. And that's just, I guess, sad to say that war can be good business for certain industries, I would say. But I don't think it's really impacted the market right now with things the way they are. We'll see what happens with escalation soon.
Exactly. Well, that's what we're all waiting for. But I'm thinking what you're saying, that's kind of like the old World War II argument, right? Where we're building all the tanks and, the economy benefits from that type of ramping up for war.
It does.
But to me, this is different. If we had an all-out war, worst case scenario in the Middle East between Iran and Israel with others getting involved, I mean, you could be talking about oil going up a lot and things like that. This seems a little different, Hopefully we avoid it.
Hopefully, but oil, don't forget, we're a very large producer of oil. True. And we can export we could be the biggest one in the world. So, that means if oil spikes, yes, you're going to pay it at the pump, but you're going to win it on the stocks that are oil stocks. So it depends which side of the fence you're playing on. And that's why I often talk about wearing two different hats. Are you an investor or are you wearing your consumer hat? They might be diametrically opposed to what you think about what's going on.
You and the hats, usually you had your Dow 40,000 hat or your Yankees hat or
got
something.
Close.
I know it got close, but we didn't quite get there. Speaking of the Dow, as we look at it today and we watch into the close, I guess the headline was the housing, right? What'd you make of that? Yeah. I mean, housing starts plunging in the month of March. See the markets mix. The Dow's up a little bit here in the final 90 seconds or so of trading. The S&P and the NASDAQ are down, but housing starts were down a lot.
Yeah, it doesn't surprise me. I mean, with the 10-year Treasury yield spiking to the highest point since November, that has a direct correlation on mortgage rates. And mortgage rates now are in the mid 7% range. They've been running at about 3% over 10-year Treasuries, and that's kind of wide. It's starting to got a little closer, but then it widened again, and that drove down people into the sidelines. It drove people into the sidelines. And right now, just as a quick example, pre-COVID, we had 1.15 million homes available for sale. Right now, there's only 750,000. So there's not a lot of homes, and the mortgage rates are high. And so a lot of people are just saying, you know what? Let me see what happens with interest rates. It looks like it's going to be end of the year kind of a thing. So I'll sit on the sidelines. And that's what happens when you have housing starts go down. Those other things tend to adjust accordingly.
Well, that's kind of a different frame of mind for people, right? Because if I asked you a few months ago, you might have said rates are coming down sooner. I probably did ask you. I don't remember what you said. But the point is, like, the expectations have changed here a little bit. To your point, they're further out.
Yeah, I think expectations are nowhere near people expecting rates to go down. Yeah. The market consensus is that at the earliest it's going to be September, and it could be even later than that. So people are like, why am I going to rush and pay 7.5% if perhaps in the latter part of the year it'll be back down below that 7 number? I need a number in the 6s for things to kind of start moving again.
Right.
And then when it gets to the 5, we're off to the races.
We are off to the races. Thank you, Doug. Always great stuff from Doug Flynn there. It's closing time.